This LOS is describe functions of and participants in the foreign exchange market. The foreign exchange market. Measured by average daily turnover, the foreign exchange market is by far the largest financial market in the world. It has important effects, either directly or indirectly, on the pricing and flows in all other financial markets. There is a wide diversity of global FX market participants that have a wide variety of motives for entering into foreign exchange transactions. The foreign exchange market, market functions. So we're going to look on the left-hand side some participants and purposes, and on the right-hand side some types of FX products. So on the left-hand side, participants and purposes, companies and individuals transact for the purpose of international trade of goods and services. A company buys something from another country, they have to pay in that foreign currency. Okay, an individual, you travel to another country, you convert some of your currency. Capital market participants transact for the purpose of moving funds into or out of foreign assets. Hedgers, who have an exposure to exchange rate risk, enter into positions to reduce this risk. And finally, speculators participate to profit from future movements in foreign exchange. So some of the types of FX products: currencies for immediate delivery or spot market. I take $100, I go to the exchange window and I get some euros or some Great Britain pounds. That would be a immediate delivery on the spot market. Forward contracts, which are agreements for a future exchange at a specified exchange rate. FX swaps, which are a combination of a spot contract and a forward contract used to roll forward a position into a forward contract. And finally, there's FX options, which are options to enter into a foreign exchange contract sometime in the future at a specified exchange rate. Continuing with the market participants, we're going to look at the buy side and sell side. So on the buy side, we've got corporations, real money accounts, leverage accounts, retail accounts, government, central banks, and sovereign wealth funds. On the sell side, you can see it's large dealing banks or some other financial institutions. And this is just some data from the text with regards to market size and composition. The thing to get out of here, you can see that spot market is 36%, but the swaps are 44%. So relative, just giving you some indication of the size and composition. Spot market 36%, OTC forwards 12%, exchange trade derivatives 4%, swaps 44%, and over-the-counter options 4%. So swaps the largest market, spot the second largest. And continue with just some statistics. You can see here the FX flows by counterparty. Interbank 39%, financial clients 48%, non-financial clients 13%. So the financial clients is the largest component there. And the FX turnover currency by pair, you can see it's the US dollar to the euro, which is 28%, by far the largest currency traded. After that, the Japanese yen, US dollar, Great Britain pound, US dollar, Aussie dollar, and finally the CAD US dollar. So a quick practice question to check our understanding. An investment advisor based in Sydney, Australia makes the following statements to her client when describing some of the basic characteristics of the foreign exchange market. Statement number 1, foreign exchange transactions for spot settlement see the most trade in volume in terms of average daily turnover because the FX market is primarily focused on settling international trade flows. This statement number 1 is A, correct, B, incorrect with respect to the importance of spot settlements, or C, incorrect with both with respect to the importance of spot settlements and international trade flows. Okay, you can see that C is correct because foreign exchange transactions for spot settlements see the most trade. No, that's incorrect. We could see from that little graphic earlier in the slides, and it is in the text, that swaps is the largest market. So it's not correct. But then with regards to the second point, it says the FX market is primarily focused on settling international trade flows. No, that's not correct either. Non-financial clients is a small part. It's the financial clients, and interbank makes up is the primary focus. Okay, so again, the importance of memorizing a lot of the little factoids within the text. So continuing with another practice question, again, it's the investment advisor based in Sydney, Australia, making a statement to her client. So statement number 2 is the most important foreign exchange market participants on the buy side are corporations engaged in international trade, and on the sell side, they are the local banks that service their FX needs. So statement 2 is A, correct, B, incorrect with respect to corporations engaged in international trade, or C, incorrect with respect to both corporations and the local banks that service their trade needs. Well, I think you'd be happy to see this question on the exam. Clearly C is the correct answer, because as of 2010, the most important foreign exchange market participants in terms of average daily turnover are found not among corporations engaged in international trade, but among huge investment managers, both private, for example, pension funds, and public, for example, central bank reserve managers or sovereign wealth funds. A large and growing amount of daily turnover is also being generated by high-frequency traders who use computer algorithms to automatically execute extremely high numbers of speculative trades. Although on their individual ticket sizes are generally small, they add up to large aggregate flows. On the sell side, this is important. The largest money center banks, for example, Deutsche Bank, Citigroup, HSBC, and UBS, are increasingly dominating the amount of trading activity routed through dealers. Regional and local banks are increasingly being marginalized in terms of their share of average daily turnover in FX markets. Just 2 more quick practice questions to finish this LOS. The first one, in order to minimize the foreign exchange exposure on a euro-denominated receivable due from a German company in 120 days, a British company would most likely initiate A, a spot transaction, B, a forward contract, or C, a real exchange rate contract. Okay, I think that question was pretty easy as well. You'd be happy to see that one on the test. B is correct. The receivable is due in 100 days. To reduce the risk of currency exposure, the British company would initiate a forward contract to sell the euros and buy pounds at an exchange rate agreed today. The agreed upon rate is called the forward exchange rate, and therefore the British company knows with certainty the rate that they're going to get. And one last quick practice question to finish this LOS. Which of the following counterparties is most likely to be considered a sell-side foreign exchange market participant? A, a large corporation that borrows in foreign currencies. B, a sovereign wealth fund that influences cross-border capital flows. Or C, a multinational bank that trades foreign exchange with its diverse client base. Okay, this question should be fairly easy. C is correct, so you just have to read very carefully because it's considered a sell side. And as I said, as I'm doing these practice problems, I'm always anticipating how the question could be changed so that it'd be similar but different. They could easily change it to a buy side, you know? So again, just recreating the picture from the slide. The buy side, corporations, real money accounts, leverage accounts, retail accounts, government, central banks, sovereign wealth funds. But this is talking about the sell side. We can see on the sell side, it's really the large dealing banks that we talked about, the HSBCs, the Citibanks, the UBSs of the world, okay, or other large financial institutions. So a large corporation, no, that's not right. A sovereign wealth fund, no, that's not right. They're on the buy side. On the sell side, it would be a multinational bank that trades foreign exchange with its diverse client base. Very easy question. And that's the last slide for this LOS. Thank you.